Hey, it's Stanis. I'll talk about finances and my journey to wealth. Today I'll be showing my Robinhood portfolio about 40K. This is currently the bulk of my net worth, but I foresee my portfolio growing exponentially once I start to earn around 50K instead of 27K in the coming year and when we see the market flip. I previously hit 60K at its all-time high, but with the current market, it has dropped significantly to its all-time low. For the next couple of months, maybe years, it's possible that it will continue to go down. Am I upset about the losses? Of course, but probably not for the reason you're thinking. I'm more butthurt about being farther away from my next goal than what the money could have bought me. I've been constructing this portfolio since December 2019. As for my early mistakes and one I'm sure you will fall for or have fallen for if you don't know about it, what I'm alluding to is this model that generally shows great for you and makes you think you're God's gift to the world at the top. Then it slowly goes down. Then as it slowly goes down, since you've bought the stock, and potentially sell it off to temporarily stop the pain, only to buy it back in when it recovers down the road, or when growth and interest returns back into it. Making moves like this is a for sure way to ruin your potential gains. Nevertheless, when I first began investing and saw a negative overall return on my portfolio, it actually scared me. It actually scared me at the time because I thought I was going to make money, not lose money. The scary moment, which was only about 4% drop in a $500 portfolio back in the day, caused me to fall into the loop previously discussed. Once I understood what just happened to me and I dealt with the embarrassment, I realized shortly after funding it with a couple $100 from the fast food job portfolio green, so I bought a stock that was currently on the daily movers of the Robinhood page and dropped around $200, expecting it for it to go up. It didn't. So I jumped out of the stock, then it began going up again. And I bought it because the FOMO, fear of missing out, was too strong for a young lad back in the day. It was unfortunate, but I just stomached the loss and chopped it up to a learning experience. From that day forward, I decided to only invest in worthwhile stocks and give my portfolio some time to grow instead of acting like an impatient child at the grocery store. Eventually, I got out of the red, and that thought process ended up being correct. Then again, for the past 2 years, the stock market has been on a tear, and it's fair to say most people have made easy money investing into the stock market. That is until now. This year so far has not been as bountiful with attendees as before. So during this time, I will continue to invest in stocks and any reasonable opportunities that have been beaten down and are trading below their true potential. Even though I believe we are going to continue trending down, especially since Apple is yet to be hit hard. Once Apple gets hit hard or decreases a good amount from its all-time high, more fear will definitely enter the markets, possibly finding a new bottom for the markets. But until then, I will continue dropping stocks. You might wonder how I could deal with a 20K unrealized loss. Short answer, I don't care. That money either would have been wasted on random material items or potentially spent on a nice trip to somewhere, which I do consider a good return on your investment. Nevertheless, the market won't end today, and I still have a lot of time to see greater yields. So I'm not really. The determining factor for me is that a 40K portfolio or a 60K portfolio is not a life-changing amount of money, in my opinion. So until I reach my goal of being completely free from the need of work, I will continue to add aggressively to the markets and build new ventures.